Welcome back, everybody, to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we're going over our number one buy setup and our number one sell setup of the day. Before we get into that, of course, we're going to take a look at two different things. The first being COT data, and the second being retail sentiment, and then we'll break down our number one buy and number one sell of the day. So let's go ahead and jump on into our COT data tab. But just before we get started with this, I want to mention really quickly to you guys that right now, our VIP Discord is 55% off. That's right, our Discord you can get access to for less than half of the normal price right now. We have trade setups from 3 different traders, as well as other analysis, different Edge Finder screenshots, as well as a community of thousands of traders all around the world that are committed to trading and helping each other and interacting with each other. And it's a really cool community to be a part of. And right now, for a limited time, you can get access for 55% off when you use promo code A1YT. So go check it out. Go to a1trading.com and you can get the Discord for 55% off. But with that, let's go ahead and dive on into some COT data. Here we are taking a look at the COT net positioning, and this shows us the overall long and short percentage on each of these assets that we're tracking in the Edge Finder. So right now, COT traders or institutional traders are really short things like the Swiss franc, the yen, and the Canadian dollar. The Swiss franc being the most short out of all of the assets. Right now, 86.79% of COT traders are shorting the Swiss franc. On the other hand, their most long asset is gold, followed closely by oil, and then we have silver, the Nikkei, and then the pound is actually our most long currency at the moment. But gold is the most long overall, with 86.6% of open COT positions on gold. They are long. We can take a look at the latest weekly COT filing, which is a really cool feature here in the Edge Finder that actually compares last week's COT data to the most current COT data. So what we can see here by taking a look at this list, the most positive change percentage-wise here at the top and the most negative change percentage-wise here down at the bottom. So like, for example, the US 30 here, we can see that overall from last week to this week, the overall change was a subtraction of 731 long positions. So 731 long positions overall were closed, whereas 4,391 short contracts were opened on the US 30. That was an overall net change percentage difference of negative 8.05%. And we can see that overall, they are still about 50-50 on the US 30 as a whole. They are technically leaning just slightly favored to the long side. However, their sentiment does seem to be shifting, with all of these short contracts being opened and long contracts being closed overall. So that's a quick example of how you read and look at this chart. Again, I think it's really useful to see how COT's sentiment is shifting on a week by week basis. But with that, let's go ahead and jump on into retail positioning. Well, we'll start with our major currency pairs first. So I'm going to select major currency pairs only. And here are our US dollar pairs. So right now, the retail crowd or the day traders are overall 77% long on USD CHF, which is a bearish bias or bearish signal for us. On the other hand, USD JPY and Aussie USD are both favored on the short side, both over 60% short here, 62% for USD JPY and 67% for AUD USD. These are both pretty heavily favored short, which is a bullish indicator for us. We can take a look at, I'm going to throw in indices, metals, and commodities. I'll remove these major biases, and there we go. So overall, the crowd right now is very long things like platinum, silver, copper, the Russell, iron, oil, and the Nikkei JP225. These are all bearish indicators for us, whereas they are shorting things like the German 30 and the S&P 500, which are bullish for us. Finally, we can finish up with our minor currency pairs. and we have a big list of stuff here. All of these pairs here are favored over 60% on the long side, which is giving us a bearish indication. And all of these pairs here are favored over 60% on the short side, giving us a bullish indicator there. So that was a quick look at retail positioning. We'll head back on into top setups, and I'm going to remove any neutral biases that we have, just so that we're left with bullish and bearish biases. And there we go. So we have a pretty big list of stuff here today. 3 very bullish biases being gold, bonds, and Aussie NZD. And we actually have more very bearish biases than we do normal bearish biases. And you can see it's pretty much every single currency against the Swiss franc right now. So pound Swiss, euro Swiss, CAD Swiss, dollar Swiss, New Zealand Swiss, all very bearish biases right now according to the Edge Finder. But we do have one clear top buy being gold with a score of +11, and we have one clear top sell as well, NZD CHF, with a score of -12. So let's go ahead and break those down. We'll start off first with gold. So I'm going to go into data scanners, select gold here, and we can take a look at all of the data and numbers for XAU USD. Now I say XAU USD specifically because we are comparing gold to the price of the dollar. So for example, all of this economic data here is US economic data because this is, again, XAU USD. So overall, we have a very bullish bias, score of +11. COT data is a score of +2, and retail sentiment a score of 0. Overall, we can see, again, like we saw earlier, that gold right now is the most long asset when it comes to institutional traders. COT is overall 86.6% long. And not only that, but their weekly change was actually positive. So meaning last week to this week, COT grew even more bullish on gold. Retail sentiment, though, with that score of 0, you can see here that they're pretty much 50-50. They are slightly, just slightly favored short on gold at 53%, but it's too close to 50-50 for us to really call it one way or the other. Seasonality right now is a score of +1, and we can see that historically speaking, gold does trade higher in the month of June. Our trend reading right now is a score of +2, and to get a better look at that, we're going to open up the price forecast tab here so we can take a look at the gold daily chart. So here it is right up top, XAU USD, and we can see that over the past couple of days, gold has continued to move higher. Now, if you take a look at the chart, say for example on TradingView, you can see just how crazy this gold move has been. Pretty much ever since February, gold has been tearing higher, forming all new highs, and has had a little bit of a pullback since then. But ever since this big move on June 7th, since then, almost every day we have been creeping a little bit higher, including today's daily candle, which is just poking out there with that little bit of green, moving a little bit higher on the day. But you can see here also in price forecast that the algorithm is suggesting that it thinks that gold is going to continue to move higher over the next couple of days. We'll go back in and take a look at some fundamental data. Our interest rates, GDP, manufacturing PMI, retail sales, and unemployment rate are all scores of +1, whereas services PMI and the employment change are scores of -1. And again, we can take a look at this data right over here, and this is US dollar data. So right now, the GDP in the US is 1.3%, which was a miss from the forecasted 1.6. Manufacturing PMI came out at 48.7, which again was a miss from the 49.2 that was expected. Services PMI came out at 54.8, which was a beat to the expected 51.3. Retail sales came out at 0.1, again a beat here at the expected 0. CPI came out lower than expected, 3.3% compared to the 3.4 forecast, and core CPI came out lower as well, 0.2% compared to the 0.3% that was forecasted. Finishing up here with the unemployment rate. Unemployment rate ticked higher up to 4% after the forecasted 3.9%. So there we go. There is all the data and numbers backing up that very bullish bias, plus plus 11 score on gold. The other pair that we said that we're going to take a look at was NZD CHF. So I'm going to head on into Forex and I'll search for NZD CHF. A very bearish bias score of -12. COT data right now is actually a 0 or neutral score, and retail sentiment is a -1 score. Taking a look at that COT data, we know that the Swiss franc is the most bearish asset, or most shorted asset rather, from COT traders right now at 86.79%. However, their weekly move from last week to this week was a little bit bullish. Right now, the New Zealand dollar is just barely off of that positive score in the edge finder. We don't consider anything to be scored one way or the other unless it is over 60%. That way it is clear and obvious that it is trending one direction over the other, but this is so close to that 60%, just not quite there. Their weekly change, however, was very positive, nearly 3% weekly change for the New Zealand dollar. Right now, retail sentiment, retail traders are heavily favored long on NZD CHF. 85% of day traders right now long NZD CHF. Again, that is a negative score for us. Seasonality, we can see here also a score of -1, and historically speaking, in the month of June, NZD CHF does trade lower. Our trend reading right now is a score of -1, and we'll head back on into price forecast so we can take a look at the daily chart. So I'm going to search NZD CHF. And there we go. Here is our daily chart for NZD CHF, and we can see a pretty obvious downtrend. Ever since early June, this thing has been moving lower. It did pop back up for a couple days here, but ever since June 13th, so for almost about a week now, this thing has continued to move lower each and every day. And right now, price forecast is predicting that that is going to continue to be the case. Finishing up here with our fundamentals, we have inflation, interest rates, and unemployment rate as -1 scores, GDP, manufacturing PMI, and employment change as -2 scores. Services PMI and retail sales are both neutral scores. Taking a look here, we see something a little bit different than what we saw with gold, because with gold, we were just looking at US dollar information because gold doesn't necessarily have an economy to back it up. But here we're taking a look at two different economies, the New Zealand economy and the Swiss economy. So GDPA here is going to be our first currency pair, that is the New Zealand dollar, and GDPB here will be our second currency pair listed, so that would be the Swiss franc. So we can see that overall New Zealand missed in GDP, whereas the Swiss franc beat GDP. Manufacturing PMI was a miss for New Zealand, but a beat for the Swiss, and services was a miss for both. Retail sales were a beat for both. Right here, score A, this is New Zealand CPI. It came out lower than forecasted, whereas the Swiss CPI came out as expected. The unemployment change in New Zealand ticked up by 0.3%, and it came out as expected in Switzerland. So there we go. There is all the numbers and data backing up that -12 score, very bearish bias for NZD CHF. I hope you guys enjoyed this video, and don't forget, right now for a limited time, you can get access to our VIP Discord for 55% off. That is less than half of the normal price. Go check out a1trading.com or check out the links down in the description below to get access to the VIP Discord for 55% off. You can use promo code A1YT at checkout. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.